Hello everyone. In this video we are going to study the topic bank and its types, Indian financial system and its growth, innovation, LPG, all things. So let's get start the video. What do you mean by Indian financial system? Who are involved in this and how it works? So, Indian financial system means, as the name Indian financial system relates to finance, means something related to money regulation or finance regulation, not money, finance regulation, financial services, financial intermediaries. As the name suggests, we think, or financial market, share, debentures, we think that you all are right that financial system involve financial institution, market, banks, financial instruments, services, the whole economy means where economic activities are conducted or which involve the money, exchange of money or surplus, deficit, all these are coming under Indian financial system. Understand? Okay. So the Indian financial system means where a intermediary involved or where the saver and the borrower also involved. Saver means who having surplus money with them. They want to deposit or they want to save it with an intermediary. Let's say the intermediary is bank who having extra money. They want to save their money in bank. Then also the persons having deficit, also they are involved in the economy, so they want to satisfy their requirement, so they want money. So for this purpose they go to banks and take loans. So the what we understand, the intermediaries between saver and the borrower is bank, who save the money of the saver and lend it to the lender for a specific commission or a amount. Let's the example is from borrower, bank charges 10% interest, but when it will pay to the saver, bank gives 5% interest, or the 5% another which is left out, that is for the bank income. Understand? All these are called Indian financial system. And the intermediary, which I give the example of bank, it may be financial institution, NBFC, financial market, all of this. Okay? Okay. Just look at the point. Who are the intermediaries? It includes different financial markets, institution, instrument, services, and mechanism which promote the generation of saving, investment, capital formation, and growth, and overall leads to growth of economy. Understand? Now the next concept is bank. How bank developed in India, how it works, how it run. So bank means it comes from a word BANCK, bank, which means a joint stock company. You can write as bank is an institution where it accepts deposit from the general public and extends loan to also the general public and government. Now the question is, who regulate the banking regulation or banks, or which act regulate banking activities? The act is Banking Regulation Act 1949. Now the question arises, how banking system grow in India? What is its history? Why banks are came into existence? There are three phases which shows the development of banks. The first one is pre-independence era, the period of 1786 to 1969 of Indian banks. When Britishers are the ruler of India, they developed a bank of Hindustan. Why they developed Bank of Hindustan? Because Britishers are the most selfish persons because they want to take away all the money, all the resources of India to their country. So in the year 1770, they established a bank, that is Bank of Hindustan, which fails badly. Then Presidency Bank came into existence. What is Presidency Bank? At that time, in the year 1809, Bank of Bengal established, then Bank of Bombay in the year 1840, and then Bank of Madras in 1843 was established. All these are later in the period of 1920, all are merged and a single bank formed, that is Empirical Bank of India in the year 1920. Or also later it changes its name, that is SBI, all we know as State Bank of India. Then in the period of 1935, RBI was set up as a private bank. At that time, SBI is the Central Bank of India. RBI set up as a private bank. But later on, RBI was the central bank. Then SBI is a bank. At the time of first phase of banking system, at that time in the period of 1929 to 1939, Great Depression arises in the economy, where people think that there is a also involvement of government, not the Britishers. So after independence in the year 1947, in 1991, nationalization of Indian banks takes place that gives a new reform into Indian banking system. What are those reforms? In 1949, Banking Regulation Act enacted after the Great Depression or independence, post-independence. Then after independence, in 1959, seven SBI subsidiaries are nationalized. In 1969, 19th July, 49 banks are nationalized. Then 1975, RRB set up Regional Rural Bank. And in 1980, six banks are nationalized with deposits over 200 crore plus. Now, third phase of banking system, where LPG takes place, liberalization, privatization, globalization. This is the new phase of Indian banking system with the advent of Indian financial and banking sector reforms and reforms after 1995. Means in India, banking sectors are growing. Also, the financial sectors are grown. The LPG decision was taken by whom? At that time, Finance Minister of India, who is Dr. Manmohan Singh, at that time, Finance Minister, who is the main pillar of the Indian financial system. At that time, government opened the gate of liberalization for all the banking sectors, for both private and the government involved in banking system. Then later on, in 1993, government merged New Bank of India with Punjab National Bank. Then, till now, banking industry has changed tremendously, with retail banking shifting to universal banking, e-banking, customer satisfaction. All these are how from 1991 to 2026 we grown up. You think that change? Understand? Now, the next concept is types of bank. There are two types of bank. One is commercial bank and another one is cooperative bank. In this video, we are going to learn commercial bank. Commercial banks are established with the objective of collecting money from general public and giving loan to the general public by way of cash credit, overdraft, etc. Okay. Then what is the structure of commercial bank? Commercial bank first divided into scheduled bank or non-scheduled bank. What do you mean by scheduled bank? Scheduled bank means the bank which are registered under the RBI Act 1934 and having paid up capital of 5 lakh or more, that is come under scheduled bank. And what is non-scheduled bank? The banks which are not registered under RBI Act and also whose paid up capital is less than 5 lakh. Okay. Then scheduled bank is further divided into private sector bank, public sector bank and foreign bank. What do you mean by public sector bank? Public sector bank means where there are holding of government and RBI. That is called as public sector bank. Major holding of RBI and government. Examples of public banks are Allahabad Bank, Bank of Baroda, SBI, Bank of India, Canara Bank, Central Bank of India, Oriental Bank of India. All these are involved under public sector bank. Among these, SBI is the important bank. SBI is the country's largest commercial bank in terms of assets, deposits, and employees. Before, it was named as Imperial Bank of India. It was later on nationalized and given the name State Bank of India. Okay. Then private sector bank. After nationalization, 14 largest banks in 1969, no banks were allowed to be set up private bank. Then after 1991, Global Trust Bank was established. And then the first bank after liberalization and later amalgamated with Oriental Bank of Commerce is HDFC, is the first private bank of India which is still in exist. And another type of private banks are Axis Bank, South Indian Bank, City Union Bank, Yes Bank, ICICI Bank. All these are examples of private sector bank. Then foreign sector banks. Foreign sector banks means the central bank is in the foreign country but the branch is established in India. Okay. What are the examples? Abu Dhabi Commercial Banks, American Express Banking Corporation, then Bank of America, HSBC. All these are coming under foreign banks. In our next video, we will discuss about RRB, Nationalized Bank, SBI, which are the subpoints of public sector banks. Now, the next one is cooperative bank. Cooperative bank means which is registered under the Cooperative Societies Act 1955 and governed by Banking Regulation Act 1939, where a cooperative society engages itself in banking business. It is called as cooperative bank. They generally give credit facilities to small farmers, salaried income employees, then small scale industries, etc. There are three types of cooperative bank. First one is state cooperative, then district and central cooperative bank, then primary credit society. So that's all for today. In next video, we will learn regional rural bank, NABARD, and any other type of banks, which are the most important. So for today, thank you so much.